Welcome back. We are continuing with earnings analysis. Bank of Baroda reported a strong set of numbers, 18% advances growth, 16% deposits growth. The asset quality excellent, annualized slippage ratio lowest in 11 quarters. Cost to income ratio is actually lowest in 22 quarters. Yes, the pressure on margins is what everyone noticed. But for more on the bank's results and its outlook, we have the person who has just taken over as the managing director, Mr. Debadatta Chand. Mr. Chand, thank you very much for joining us.
Welcome.
The first question really is this loan growth. It's Bank of Baroda's loan growth, 18% was very good. And we are getting the same thing even from other NBFC companies, 18 and 20% growth. Does it look like it can continue like this?
Yeah, Latha, I believe that we can continue the loan growth journey. The reason being, this is particularly a very unique quarter, wherein the bank could optimize on the loan growth side, at the same time maintaining the margin almost at 3.3, at the same time giving a 88% growth in the net profit. So if I look at a couple of what you can say the main important aspect of the banking in terms of the top line, the bottom line, the asset quality and the margin. For Bank of Baroda, all four factors have come very good for this quarter. And that is what important part of the entire that we are communicating to the market, that the bank is trying to optimize on every front. And my sense that going forward also, since the demand is there in the economy, the growth would be possible to replicate for the consecutive quarters. But for a guidance, we have slightly given full year guidance slightly lower than the 18%. The reason being, at some point of time, the base effect also would start kicking. So the overall guidance to grow around 15% for the full year. But going forward for quarter to quarter, the growth can still be around 18%, which we have achieved in the first quarter.
Okay. Now that point is taken. You said margins are maintained. From year ago levels, you'll have maintained. But your fourth quarter margins were 3.53. So are you confident that you can even freeze it at 3.3? Because deposits will catch up. Liabilities always catch up. So there is a fear that it can come down to 3.2, you think?
It's a fact that the cost, there is a push in terms of the cost of deposit, and that has, if you look at the growth, the percentage increase in the cost of deposit higher than the last quarter. At the same time, we also say that there is a significant percentage of the MCLR books still to get repriced. Okay. Because all this 1 year MCLR get repriced at the end of 1 year. And since the repo rate hike was intervening below 1 year, so there is a bit of a portfolio which is there, which can still be repriced for the MCLR. The second aspect, we are pushing very clearly now that we also wanted to have a lower cost to income ratio. Although we are not giving any numerical target for cost to income ratio, but then clearly the bank started working on that. If you compare the YOY reduction in cost to income ratio, it is almost like 945 basis. If you exclude the MTM impact, then it is almost 166 basis. So a couple of things which again we are trying to figure out is to how to again create an efficiency in terms of the cost to income ratio. So I believe that we are guiding the market that we will be in a position to maintain 3.3% going by the outlook we have as on today. Okay. So any change outlook, things can be different, but currently we hold our guidance of 3.3% on the NIM side.
This is very important what you say about OPEX, because even your previous MD was telling us that they were able to bring down branches where it was coinciding with the banks that you all took over. And obviously, because Bob World is working, those are cost efficiencies. You think you can still optimize in terms of, replacing retired workers or retired employees, or even branch rationalization? Even those spaces are available for you?
It's a holistic in terms of how do I look into the cost to income. There are two ways I need to look into. One is a case where I optimize my income side more. The other is to reduce the cost. So the cost matrix goes in terms of HR also, in terms of branch also, in terms of process automation also. The point that I have also said earlier is that as a bank, we invested heavily into the product side and also on the HR side. But now time has come to look into the process side also. So I believe all this would result into some kind of a better optimization on the cost to income, and that would help the bank to maintain its margin going forward.
Okay. What stood out about your post results, message to analysts is that you expect to grow overall 2% faster than the system. And retail, you said you were expecting to grow, I think, 5 percentage points faster than the system. You're confident of that, and I'm asking you because there are 2 or 3 challenges. HDFC is with HDFC Bank, and that is cheap money and a system that knows how to give home loans. And then there is Geo Financial for consumer lending. So you still think retail is achievable?
It is actually. It's not like it's a one quarter we are given a 25%. If you look at last 8 quarters, the retail growth has been better than the market. And it talks about my delivery in terms of retail that is much more important. A couple of new things that we started rather a couple of quarters back, and now we are trying to optimize is the sales part of the entire retail. So we are strengthening the not only the credit delivery in terms of retail, at the same time we are also trying to have more sales executive to drive retail. One.
Okay.
Secondly, another structural change we have made in terms of our processing center. We had limited processing center in terms of retail with the same control.
Okay.
With the same control, we are trying to have more processing center, and that typically can reduce the lead time in terms of sanction. That is what we call it TAG. So with that, I believe the franchisee is working very well and continue to do same way, and will maintain that kind of a what we can say delta over market, and that is what will pursue.
You are hoping to achieve. Okay, I'll tell you 2 or 3 fears that you hear from RBI and other banking sector watchers, that unsecured credit is a worry for the RBI. They've written to some banks and NBFCs. The second thing is, some people worry that retail is overcrowded now. You know, big banks are, some of them 65% into retail, and at some point the cycle turns. You know, some of them have already got very good retail history.
Yeah.
Some of you are new to retail.
Yeah.
So there is a fear that in the first cycle, will you have a problem in terms of asset quality?
No, let me tell a couple of data points before I come to the subject, that retail debt as a percentage of GDP is very low in India.
That is true.
So there is a huge upside.
Unmet demand.
Yeah, that's available. The second aspect is that the market significantly now moving from asset-based financing to cash flow-based financing, because people do have adequate cash, and for that they can service a loan in much quicker time as compared to earlier. And as far as we are concerned, I have a aging of almost 3.5, 4 years on the retail side now.
Okay.
Secondly, my portfolio is almost now 20,000 crore, which is also sizable in terms of looking into the portfolio side of it. But as far as Bank of Baroda portfolio is concerned, these are all existing customer availing, almost all existing customers.
So you
availing.
have data on that.
So we have the data on that. We have their cash flow, the life cycle, everything with us. And as on today, the percentage of NPA is very low as compared to any other retail loan.
That is true.
And when I compare, if I typically look at the growth, it looks high, but then my base is very, very low. If I compare the largest bank had a much higher portfolio as compared to the portfolio I do carry. So a scenario at which there is a change happening in the market, point one. Secondly, the retail debt as a percentage is really quite low for India. Then I think there is a potential available therein. The only aspect that which the system talking about it with regard to that, whether I do have the adequate risk matrix to do the appraisal. And Bank of Baroda, we do have those kind of risk matrix to appraise and underwrite properly.
Oh, fair enough. That's good to hear. What's your sense about, the kind of recoveries you can get from NCLT? You have a decent number of amount of money in assets in NCLT, and plus now Go Air looks like it is recovering, but still there is a little bit of a red flag. So any statements you can give on asset quality? Annualized slippages now are among the best. But going forward, you think even the big loans?
Yeah. Couple of guidance we have given to the market. One is that to maintain the GNPA around 3.5 and the net NPA around 0.75, and the slippage would be around 1 to 1.25, and the credit cost would be below 1. So although NCLT is a kitty, because it all depends upon all processes they are in, so without getting into that account wise, but I believe all these numbers are achievable based on the current, what you can say, on the recovery that we are seeing and the slippages that we are seeing. We have also said that my recovery for the full year would be 12,000 crore.
Okay.
And we also said that the net slippage would be negligible, or the delta can be something around 2,000 to 3,000 positive. Okay. So in that scenario, I am quite helpful to maintain all this guidance that we have given to the market.
Fair enough, fair enough. Your other, guidance to the market, or whatever, positive that the market sees in you, is the recruitment philosophy in Bank of Baroda has changed from the time you had a lateral recruit as a managing director from the private sector. I think the only example I know of a public sector bank having a private sector head. Later on, you all had the chief digital officer, CFO, all of them from outside. You intend to continue that practice, and are you confident it's working well?
Yeah, it's working well, and I do believe the stance would continue. The philosophy behind this, or the bank stance, is that areas where particularly a bank like us, a PSU, the market has moved ahead of us in terms of those kind of implementation. We need to have somebody from outside to allow us to catch up. So areas where we as the PSU bank, we are not at par, we'll continue to have those wherein we'll have market expert who can again drive us to achieve those numbers. So the experiment Bank of Baroda, this process started something around 5 years back, and it's perfectly working. And as a stance and strategy also, I very clearly said earlier also, anything in the bank which is giving us positive dividend, as far as I am concerned, will continue on all those aspects which is giving positive dividend.
Okay, that's good to hear. Just a word on when we were talking asset quality, you had more provisions than people expected. You put some floating provisions. You will continue to do that?
See, that's why we believe that my only objective is to not to optimize on the profit side, but to also strengthen balance sheet. The PCR is all-time high at 93 point something. So this would continue as a hygiene and strategy to strengthen balance sheet. So wherever there is a possibility for me to create some kind of a, bit of provision which can also give me a bit of comfort going forward for any headwinds that the market can see, then I think that's a proper strategy and proper, for the bank also comforting all analysts and all market participants for the matter.
Okay. Well, a final question on your capital. Will you want to divest in any of your investments in say NSE or anything that you may have, anything that you will do to your book, or will you even raise capital, because the market is very kind to banks now?
So rather my first point is that the PSU bank, we are in a very sweet spot at this point of time. And the performance for last, if you look at 8 quarters, these are very consistent. Rather, I would expect a re-rating of banks PSU as a pack rather looking at one particular bank like me at this point of time, point 1. Point 2, as far as Bank of Baroda is concerned, my CRAR is now 15.85. And
no, you don't need. I was only saying the market is kind, so why not take advantage?
No, we do have mandate to raise 81 and Tier 2 for 5,000, but since the CRAR is quite comfortable, we are not looking at any capital raise at this point of time. The second aspect with regard to a divestment, we as a bank pursue that actively at any point of time. But the final decision would be based on the conduciveness of the market and the valuation. So wherever my own subsidiary or wherever we have strategic investment, we always pursue for getting some of them monetized, but then all would depend upon the valuation and the market conduciveness.
Okay. No, I can understand waiting for better valuations for PSUs as a whole seems like a great strategy. Mr. Chand, thank you very much for spending time with us.
Welcome, Latha, and pleasure interacting with you. Thank you.
Okay. Welcome, sir. That's it from the BOB management. We're going to a break. It's time for Chartbuster.